Let's get to the reaction now. Dr. Carole Nakhle, CEO of Crystol Energy, joining us from Rome. Dr. Nakhle, good morning to you, and I guess Happy New Year. Great to see you on the show again. So what do you make of Trump's request or directive, if you want to call it that, to OPEC to reduce oil prices?
Good morning and belated Happy New Year to you too, Rotus, and all your audience. Well, look, I mean, if I just look at it from whether it makes sense, forgetting about the oil production in the US, I mean, there's definitely a merit to his argument that Russia is still able to fund its war from oil and gas revenues. So the higher those prices of those commodities remain, the more money will continue to flow into Russian coffers and the longer the war will be sustained. And therefore, what President Trump is saying is using the following logic. If Russia feels a squeeze and its economy suffers and its money shrink, then it will have bigger incentive to try to end the war as soon as possible. So that is the rationale, and it makes sense. However, President Trump's statement also contradicts what his own oil and gas industry, to which he's very sympathetic and supportive, would like to see. Because if prices go below a certain level, oil and gas producers in the US are not going to be happy, because at the end they have the same interests as OPEC, which is to keep prices high enough to justify further investment, the drill baby drill that President Trump wants, and therefore to achieve certain profitability. They are not going to produce just to please President Trump at the expense of their books. It has to be a balanced equation. But there was another also, if you allow me to add one more angle, it clearly shows that it seems that President Trump wants somebody else to take on the responsibility of squeezing Russia, then introducing another layer of sanctions on Russia. So it's not as simple as what he has conveyed.
Thank you so much for that. So there's no response yet from OPEC. I guess it's a bit of a tricky situation for them. What do you think they could do at this point?
I'm not surprised that they are not making any, they have not produced any reaction or any statement on that, because they would like to show that they are not a politically motivated organization. And at the end, it's part of their membership or collaboration is Russia, because we're talking about OPEC plus. Now, that said, what we can still see is OPEC maintaining its what it has announced it would do, that is to start releasing some of the voluntary barrels into the market as of April 2025. So you remember that decision was delayed several times last year, and they said that in April this year we could start putting back some of those barrels in the market. So under existing market conditions, where prices are now in the higher range of the 70s, maybe that could be a policy that OPEC Plus might stick to, especially if President Trump imposes reinforcement of sanctions on Iran, and that results in the loss of certain barrels. So that could justify, but they are not going to go on TV and say, definitely President Trump, we're going to do it because you asked us to do.
Now, you mentioned the drill, baby, drill mantra from the president earlier. Can America increase in production any more than it's already done under the Biden administration? Can they pump more oil out?
Well, look, if you look at the history and the last years since shale revolution, actually, the impact of the shale revolution became apparent. So the shale revolution started 2008, and many people underestimated it over and over again. And even in 2020, when the industry really suffered, many people wrote it off completely. And yet the industry bounces back more lenient, more agile, and it pushes the boundaries further. So I don't want to write off further increases in U.S. oil production, because that is still possible. And I cannot predict what will happen with the implementation of the latest technology, such as digital technologies, efficiency improvements. Of course, it will not be at the same speed and scale as we saw before, but I think we should not underestimate the power of the private sector in the U.S., in the shale industry, because so far to date, since 2008 until today, we have been always surprised on the upside, and the US continues to hit a new record every couple of years. So we cannot rule it out. But it also depends on the market signal, on what the prevailing market price will be, and that will determine for investors whether it's worth investing in shale production further or not.
Now, I did want to ask you about this $600 billion investment that the Saudis have announced over the next 4 years. We understand President Trump wants to get it to $1 trillion. Saudi, of course, largest producer within OPEC. I just wanted to get your thoughts. What did you make of this development here between the two?
Definitely eye-watering sums, but we should remember that Saudi Arabia has much better relationship with the Trump administration than it had with its predecessor. We saw how tense that relationship was, and it's not a surprise that they waited for President Trump to come to the White House to announce this kind of deal. Whether they would go all the way to $1 trillion, as President Trump wants, maybe we will see. But definitely there is much greater shared interest between Saudi Arabia and Trump and the USA led by President Trump than we saw with previous administrations. And I wouldn't be surprised if that would translate into bigger deals. But of course, it also benefits the Saudi image when they try, especially when they invest in artificial intelligence and they expand their footprints worldwide, and they want to be the leader in the region. So economically and politically, it makes perfect sense for Saudi Arabia. Whether they would push it to the $1 trillion, we should wait and see. But already $600 billion is not a small sum.
Indeed, indeed. So, Dr. Nakhle, we put all this together, everything we've talked about now, and we actually previewed this with you last year going into 2025. What is your outlook for the direction of oil prices with everything we've talked about so far?
I tell you, I've been sitting on an article on oil markets outlook for now a couple of weeks, and this is something I'm able to do in one day because of all the moving parts that are happening. But that is primarily on the geopolitical side. Really, we're waiting to get more clarity. But when I look, and then the geopolitical developments with President Trump in the White House can, of course, derail a certain development on the fundamentals, that is demand and supply. But if I look at the fundamentals, I don't see any major changes. So keeping the geopolitical risk aside and any major disruptions happening, I don't think the market fundamentals have changed drastically to change the outlook for oil prices this year. And again, it's too early to tell, but so far when I look at the various forecasts done by different institutions, from financial institutions to international organizations, I have not seen any significant revisions. And so far the prevailing sentiment is that prices will remain in this current range in the 70s, maybe a little bit in the low 80s, and not far from that. But mind you, depending on how geopolitics will unfold in the coming weeks, they might produce a completely different outcome.
Actually, in fact, just to touch on that, we have, of course, the peace deals, ceasefire deals in the Middle East. Are you optimistic that we will get, geopolitical shocks are unpredictable. They can happen at any time. But just based on the precedent of the ceasefire in the Middle East between, with Israel, Gaza, and the likes, do you think we could get, extended peace going forward?
Peace is a big word for the Middle East, and we are still very far from achieving peace. So we shouldn't really confuse a ceasefire with a much-needed peace, lasting peace deal that give a sustainable outlook for the people who live there on the social front, on the economic front, on the political front. But definitely what we saw last year were some tectonic shifts in the region that have contributed to this, where we are today, and potentially could lead to a more stable political outcome. So we are done with the US elections, but also we saw a huge weakening, military speaking, of Hamas and of Hezbollah in Lebanon. We saw it drastic change in the regime in Syria, and it's still too early to tell what the outcome would be, but it's definitely not a regime that was supporting what we have today is not a regime that would support Hezbollah, as we saw with the Assad regime. And those had repercussions on Iran, weakening Iran by curtailing its important proxies in the region. And we already see with the Houthis that their policies, or whatever they were adopting towards attacking ships in the Red Sea, and their position has also softened a lot. So definitely encouraging movement in terms of moving into beyond the dark phase that we saw the last 2 years. But I cannot say that we are going to have a peace deal anytime soon. I'm hoping for it, but I think it's a big ask and wishful, something to wish for. But we remain hopeful.
Dr. Carole Nakhle, CEO, Crystol Energy, always a pleasure having you on the show to discuss oil prices. Thank you so much for your time. Fascinating year ahead. We appreciate you so much.